Welcome to Real Talk Payments podcast, powered by Pagos. We've been in the industry for a long time and seen all the hype over the years. In this first episode, let's pull back the curtain on a few things we've learned along the way, from weird rules to our favorite topic of declines and cost. With us today are Andy Barker, payments leader at Pagos, Albert Drouart, CPO and co-founder of Pagos, and Matt Wagner, VP and GM of payments at Adobe. So Matt, let's kick it off with you. You've had an epic journey in payments, I gotta say. You've worked, I think, in every part of payments there is to be working in, from networks to PayPal to eBay to Uber, and now at Adobe. You've kind of seen it all. But one thing that's kind of funny, and I think we all talk about this when we're all sitting around, payments is not something you go to school for. There's no degree in it. We've all kind of fallen into it. And we've learned along the way. So you've seen the good, the bad, and the crazy. Tell us how your journey started out. And what was your first payments baptism by fire moment?
Yeah, for sure. I've been at this for a long, long time. I think like others on the call, but back in the late 90s is when I started. And back then, payments was probably more like a procurement function. Maybe that's a bit of an exaggeration, but it's very strategic now. It's very complicated now. There's all kinds of options and complexities, but it used to be pretty simple. And here's how long ago I got into payments. When I started, account updater didn't exist. For those of you who know what that is, I was at American Express out of an MBA program, and we had a product that we were launching called Billing Watch, and I helped them launch that. That's effectively account updater. And then Visa and MasterCard took 10 plus years to catch up and sign up all the banks. So, that's maybe a sense of how long ago I got into this. And the way I like to describe my career, and this kind of happened by accident, some people will get into like a particular aspect of payments and they'll just go really deep. Like maybe you're in risk and fraud and you spend your whole career there. I've done this weird thing where, not by design, at least the first half of my career, but if you take the life cycle of a payment from when it's presented to when the money shows up in a bank account, I've done every single function on that life cycle. And that's a bit atypical, but it's been super valuable at this point in my career because I can see everything upstream, downstream, and I know how to think about that. And then I've been in a lot of different functions: finance, product, technical product, business development. All these different kind of functions also gives me really broad perspective. And the thing I love about that at this point in my career, like I'm not always looking for what can I get from a third party or a strategic partner to help us. I'm giving them ideas on what I need that doesn't exist today. And that's fun for me. So maybe a little bit about my journey, but it all kind of came together by accident. And it wasn't a career path that people would typically get into. It just kind of happened over time. And I think that's pretty common amongst a bunch of peers of mine in the industry.
Andy, you've kind of had a long career dealing with declines in various ways. Walk us through your experience and especially the joy for generic declines that we have over beers.
Yeah. So like Matt, I started in the late 90s, didn't come into this industry as a payments person. I was a back-end programmer, and that's where payments fit because, there's no prettiness about it. So they make the back-end programmers figure out how to make it work. And so I started basically my career in the late 90s doing payment systems because it was the back-end code. And as you get smarter about these things, and back then, we're talking about ISO 8583 messages, fixed width. It's not 3 lines of code to integrate with a payment processor. We had to have people on staff that knew COBOL. For God's sakes, Java was the new thing. And how are we going to find somebody that knows COBOL where you're doing more of these low-level messaging type things? But we started looking at, as every company is looking at conversion, is like, what is causing our specific declines and how do we react to them? Both from the perspective programmatically, are we doing anything wrong? Or more importantly, we had a direct line to customer service because they would always come to us and say, we're getting these calls, their credit card's being declined. Why is it being declined? So you go through the list, you look at the specs and everything else, and you see, okay, there's insufficient funds, there's fraud risk, there's some of these other ones. And back in the late 90s, there wasn't hundreds of them, there was just a handful of them. And there was the slush bucket that as I started digging in and seeing that it was the number 2 decline on our system, number one was always insufficient funds, which
Did
you
you
would
call it slush bucket? A decline code called slush bucket?
Well, we called it the slush bucket. It officially was called do not honor or generic decline. So it's that wonderful. And I would go back to the networks and I'd say, what does this mean? And they said, well, it means the issuer declined it. And I'm like, great. So why? They're like, they don't tell us. It's like, what do you
They're
mean?
lazy.
Tell us.
There's a lot of lazy banks out there. Yep.
And as we started digging in, in the specification, it says, this is what you tell your customers. Call your issuer. So that's what we did. We told the customer service, just tell them when you see that decline code, have them contact their bank. The problem is about 2 hours later, they would call us back and say, I contacted my bank. The bank never saw the transaction. Now, you're talking to a customer service agent. They probably don't have access to see what actually happened. But this is a significant impact on our declines, and we don't know what to do with it. Mm-hmm. So for me, generic decline, the slush bucket, the lazy decline code that was there, we had to start peeling back the onion and asking questions of the networks. And we actually started talking to some of the issuers. We're finding that a lot of them were on front end rejects. So when the customer called the issuing bank and they said, we didn't see the transactions, that was true. Either it was stopped before it was sent to the issuer, or the issuer, before it actually went into their system, just blocked the transaction for whatever specific reason.
And Andy, back then in the COBOL days in this example, it was probably just credit cards you were dealing with, right?
Yeah,
because like
just straight credit card.
Yeah, my early days of eBay, like it was really complicated figuring out just how to accept credit cards in different countries. Now you can talk to pretty much any partner and they'll plug you in globally overnight. But it was a very different world back then. Very simple, but and people didn't know a lot. Like we had to learn along the way.
Yeah. Like
your example, and you get all this knowledge over 10, 20, 30 years that becomes very valuable.
And the thing is okay, this is 1997, 98, 99 timeframe. I'm thinking, well, things have to get better. I just ran some reports on our clients before this podcast. It is the number 2 decline code by quarter for some of our largest customers. Insufficient funds, number 1. Number 2 is do not honor. So this hasn't gone away. It's just gotten bigger. It was kind of what I would think.
Matt, as you've kind of, you're a very global view of the world in terms of managing declines and payment methods. What's your biggest aha moments of, wait, that's why payments are failing moment?
Oh, man. I tell you what, we've looked at every company I've been at, it's been something different. I'll give you an interesting one where issuer outreach, Andy, you kind of talked about that a little bit. You'd reach out to the banks. We reached out to BBVA Bank in Mexico, and it was because this wasn't at Adobe. Actually, it was at Adobe, but we've done the same at Uber with other banks. We looked at their success rate in checkout compared to the other big banks in Mexico, and BBVA was this outlier. And we ended up talking to them, and we learned that they were punishing us because our chargebacks were too high. So we educated them about Adobe. We built some level of trust, and then we educated them on why most of these chargebacks weren't stolen cards and fraud, but it was first party or friendly fraud, buyer's remorse. And once they understood that, they made one little change in the risk decisioning system, and overnight, our success rate in checkout went up 1,400 basis points, 1,400 basis points. And that never, ever happens. Like most of the companies I'm at, we're trying to find 2 basis point wins or even a 1 basis point win, and that's worth a lot. But this was like a massive change, and it's because the bank was viewing us the wrong way. And there's thousands of examples in all kinds of other arenas where, and Andy, you mentioned this, you're getting declines. They don't make sense. And once you dig into it, you find out that there's a way to deal with it differently.
Yeah. It's interesting. 1,400 basis points is massive. That's worth celebrating. Albert, I got to say, you're one of those people that have actually taught me payments over the last 2 decades. And it seems like you've been deep into the infrastructure side. You've seen everything I could possibly imagine. why do we need 47 decline codes to say no?
Well, in one way, I was just thinking about Matt's example. I've had the opportunity to talk to even some issuers, and they set things up too based on particular merchants and behaviors, and then they never revisit them. And I think that's an interesting challenge that as things are dynamic and the more e-commerce that's happening, the more issuers are kind of trying to manage their risk. And some of those rules are very blunt, right? And that's something that I think it's worth always considering tracking, because it can often change your behavior, your accidental behavior. Even if you release something that changes something, can actually impact something. It can just hang around there in a way that's pretty challenging. I think, Andy, you were talking that e-commerce in the 90s was 10 years after the ISO 8583, which is like 1987, though most of the messages most of the decline codes that are in that original spec that still runs as kind of on the backbone. I know the networks are trying to change, but that's like most of those declines are kind of technical in nature. And I think as issuers were getting comfortable with the card not present space, I think they started off by just, it's a decline and a new, it's a decline. Why do we have to share? Some of that is because some issuers take the perspective of they're protecting their customers and what's happening in their accounts, which is fair. And some of it is like they built something early on and they only really were picking 5 decline codes, and all of that takes some time to redo and adjust, right? But if you look, why 47? Because probably, 30 of those are all about the messaging itself, right? Did something go off? Is something blocked? Is something not configured? All the things that we know can go wrong just doing connectivity. So it's just a nature of this evolution. That's why I think when Andy's talking about some of those stats, like we see on the international side, as e-commerce is still coming up, the banks are still learning, or they're still adjusting to that reality of the volume shifting more and more from card not present from card present. And that changes how they have to think about how the information they're giving back, right? Which I think is a constant battle.
Albert, you spark a thought for me. When you talk about declines, a lot of people will just naturally think about somebody's trying to make a payment. But at Adobe, even at Uber, when you're going to put your card on file to get charged later, just to validate that it's a real credit card can get declined. And it's shocking how many banks will approve more of them if you do a $0 verification versus a $1 auth. So there's just optimization, even just for card verification, that can get declined.
Yeah, totally.
Matt, you bring up a good point. I mean, some of the things, if you're new to the industry, and all of us here have been 25 plus years doing this in e-commerce, but card processing is older than that. It started brick and mortar with the knuckle busters and then the POS machines. So sometimes we forget, because we've been around for this long, that card not present is just a layer on top of POS. I mean, remember, card not present was if they couldn't do an impression on the card with the knuckle buster, or if they couldn't do a swipe and it was a key new transaction.
Doing those in taxis. I wonder how many of them just got ripped off. Fraud must have been so easy back then. They did a knuckle buster and then they go back to the office at night and it gets declined. You've already had your taxi ride, you're gone.
Now that Andy's aged all of us, thank you. Really appreciate that. I got to say, from operating side of declines, what really struck me is I just feel it's wrong to get charged for it.
To get charged for what, Kapil?
To get charged for it. And so when you're looking at your statement, every auth attempt is a cost. And even declines cost you money. And for subscription players that actually retry often, there's obviously inherent cost to this. And one of the big, I think, part of declines is also tied to just talking about costs in general. And I feel like the industry, the thing that really kind of gets me on cost overall is there is no fixed cost basis or predictable model for cost when processing payments. Now, you could go to 2.9 and 30, that Stripe for the starter package that you could get. And even then, underneath it, the costs are not predictable. Visa, MasterCard guys kind of cracked me up. They're probably the best margin operating businesses of all time.
Hey,
They make a lot of money.
Kapil, I'll disagree with you on one point. I think
Yeah.
they're absolutely predictable in that they go up every year. Like, what are their death and taxes, right? Like every year it goes up. I don't know where, but I know it's going to happen, and it happens at least once a year to me. Every
That
company.
is amazing. Well, hey, Visa makes 36 billion. MasterCard makes 28 billion. They got to keep those numbers up, right? But let me ask you, Matt, in the grand context of this, what was the most expensive surprise you've discovered in terms of cost in years?
Yeah, one of them was when I first came to Adobe, and it was related to account updater. We're a subscription company, so we pay for account updates. And I was shocked at how much money we were paying, almost $500,000 a month to one of our partners for account updater updates. And the numbers just didn't make sense to me. Like if it's more than 10% of your card base, something is wrong, and it was multiples of that. And I discovered that we were paying not just for credit card updates and expiration date updates, but like if anything changed, like if there was some kind of consumer change that we didn't care about, we're getting charged for all of that. So we talked to I won't name which acquirer it was, but we talked to them, and they ended up not charging us for non-valuable updates in the future. It was some kind of system glitch. And the other thing that probably be helpful for people on here, anytime I catch one of my partners overcharging me and I go to them and I want them to make me whole, maybe they'll go back 90 days if I'm lucky, but they cut it off. And then when partners come to me and say that they didn't charge the merchant enough money, they want to go back to the beginning of time and get every red cent that they can get. So
of course they do.
Yeah, you got to keep an eye on that. And we hired somebody at Adobe to do this. We had one at every company. But if you hire somebody to spend 100% of his or her time just managing the costs, analyzing them, seeing what changes, they always pay for themselves. Like the person we have right now probably saved us at least a couple $1 million 1 year on mistakes from a partner. That stuff is priceless. If you don't have that as a company, or you don't have a solution that can help you identify that, I guarantee you're missing out on something. You're probably being overcharged in multiple areas that you're not aware of.
I think you made a really good point on going back and how far back you could go to recoup. So being on top of that month to month, day to day is really important.
Got to catch it right away.
You lose it. I got to say, Albert, I love ordering pizza, even Domino's now. There's a tracker. It tells you when they're putting the pizza in, through the whole baking cycle, when it's going to be delivered, where it is, when it actually ends up on my doorsteps. I kind of can monitor everything end to end. But weirdly enough, you can send a payment for processing, but you don't actually know anything about the cost of payments until like 3 days later. What's with that?
Well, I guess the reality is like the systems are old and I think are backed by the traditional banking system. So I think at the end of the day, money has traditionally moved much slower. And as the networks and the payment schemes have built up, the messages have moved faster than the information has moved faster than the money for almost until relatively recently. I think that's why stable coins, maybe we don't want to get into stable coins, but I guess stable coins is something that's eating away at that. But I think, payment costs tend to follow the money. They're trying to deal with the settlement flows, which are slower even today, no matter what people say. Even the networks today are billing. Even we see that they're billing on a kind of monthly basis on different types of units. It could be number of transactions, could be the amount of money moved, it could be the amount of data moved. And so for all those reasons, I think we run into challenges tracking cost. I think it's hard for acquirers. It's hard for merchants. Everybody's kind of struggling to stay on top of it because of that reality. I think everybody's gotten really familiar with kind of the real-time authorization or the real-time verification. But I think, as many merchants know, getting your money still can take time, right? And I think that's the ultimate driver of this disconnect between kind of speed, but still slower on actual money movement and then slower on cost. So we see it all the time.
Yeah, it's interesting you bring up stable coins. I mean, even when processing on blockchain, they'll tell you what the cost is going to be right up front for that transaction. If I send an authorization, why can't the networks just respond back with what the cost is going to be? And if there's anything that I could do about it, I would, but I don't worry about it until 3 days later. One of my favorite parts about the network pricing models, or at least payments, is these fees that you just have no visibility into: integrity fees, the downgrades for interchange, the weird things that we would never think about. Andy, I feel like that's the industry's way of saying you did something wrong, but we're not going to tell you. What are your thoughts?
I mean, that's exactly. So you had asked Matt, what was the biggest, kind of shock to them back in the day when we started encountering integrity fees, and it was on the orders of tens of thousands a month that were impact on that. I went back to the processor and I said, can you explain this? And they're like, yeah, you're sending messages wrong. And I'm like, I'm not sending anything wrong. They're like, yeah, that's why it's being downgraded and you get these fees. And I'm like, but your spec doesn't allow me to send this stuff. So that was one. And they're like, oh, okay. So I said, well, you're going to fix that and you're not going to charge me these integrity fees until you give me the opportunity to actually fix the messages. That was one. The other one is we were getting downgrades because of wrong information. It wasn't even information we ourselves sent in the processing cycle. It was a message that the processor was formulating and sending as that. So you have these two situations where you may be charged for something that the processor is doing wrong, or there might not even be a mechanism to fix it accordingly. So it literally felt like it was, hey, you're doing this wrong, fix it. We're going to charge you for it, but we're not going to actually check if it's even valid or not. So it's like, are you going to charge yourself an integrity fee for the fact that you can't support what you're actually doing? And to Matt's and Albert's point, Visa, MasterCard roll these things out in their spring or fall and just say, hey, merchants, here you go. There's no, hey, do you want to review this? Do you want to do that? They announce, and then away we go.
When I was on the operating side, I'll give you my biggest surprise for cost that was unaccounted for. Maybe a little rant in the process as well. Cross-border transactions. We know Visa, MasterCard make a big portion of their revenue on that. And I'm always thinking, yeah, if the 1% or 0.8, 80 basis points is a lot. But the FX transactions, when you present in one currency and settle in another, so let's say you're presenting in Thai baht, but settling in US dollars, okay, fine. Maybe I get the Visa MasterCard rate. I can account for that and book it. Well, I looked into it. The rates I was being charged were not Visa MasterCard rates and the rates that they're using to settle. And reality is most merchants want to settle 1 to 2 days on cross-border transactions. But the networks actually don't settle those transactions for 5 to 7 days to the acquirer. So the acquirer processors are making a risk-based decision and using their own FX rate to settle those transactions early. We had a major acquirer, one of the biggest acquirers in the world, tell me, no, this is right. And I go, no, well, what rate are you using? Only to discover they were using 300 basis points marked up on top of what
I thought you were going to say 100. 300 is outrageous.
So I'm just like 3% on top of what the market rate is, and you're going to settle one day. I could wait. So I go, no, I could wait. We'll manage. Our treasury can manage FX. Yeah. We'll just take the Visa MasterCard rate. The acquirer goes, no, we can't give you that. And I'm like, why? They go, well, our infrastructure doesn't support that. So wait, you can't pass through the interchange pass through is supposed to be pass through. It's really not pass through on FX. FX drives me nuts. I think it is one of the dark arts of payments that needs to be spotlighted on. A lot of these weird things keep coming up, obviously, as we've kind of been in the industry. Let's spend a little time. Andy, I think you kind of shocked me with something the other day when we were having this conversation about the pod. You have a few rules about the industry, which I thought were funny. Rule number 2, the spec is not always right, really got me going, because I think we've all experienced that in our 25-year, and we'll kind of limit it to 25 years experience. Why isn't the spec always right?
Yeah, I mean, I feel like everything I've said in this podcast echoes my rule number 2 of payments, which is the spec isn't always right, is one of the things, and again, it's because of all these layers that exist out there and the technicalities and the limitations that are even the FX, somebody's treasury can't support it. So they're trying to be able to support what they're saying they're going to do, but doing it in a specific way. Ask the questions. The spec isn't always right. Just because it's written down doesn't mean it's actually right. Ask the hard questions. Don't be surprised if things break. And then when you go back, or your engineers will be the first ones that said, I followed the spec. It's not my fault. And it's like, okay, yeah, you did. But then you go back and say, hey, why, you talk to your account manager, why isn't it that working? They're like, oh, that's an old spec, or that doesn't work, or something broke. It's like, how do you run a business that's processing billions, trillions of transactions a day when you're the network that is defining how things work, but the spec isn't always right? And they kind of just raise their hands and they say, well, that's just the way it is.
You said something I liked. You said everything breaks. And even when the spec is right, something's going to break. And, when you're going to launch, we'll have eyeballs on it. We'll have reports and data. Like, we will be looking at it forever, expecting and looking for something to break, because it always does. And then the big problem when it breaks is, reach out to their acquirer and like, everything's clean in our shop. It's over on your side. And then we talk to engineers on our side and they're like, everything's clean here. It's over there. Like, you have to go prove to people where it's broken when stuff falls apart,
Matt, what's the weirdest payment rule requirement you've encountered in your career?
What do you mean by a payment rule? Like a spec, or what do you mean?
Like the way payments are meant to be. Hey, you could do this, merchant, you could only process these transactions here, or process it this way.
I don't know if this is the weirdest one, but one that I deal with at Adobe all the time, and it gets back to your cost thing. There are certain transactions that you're not supposed to retry. You get a Cat 1 decline from Visa or a MAC code decline from MasterCard, and they tell you, don't retry it. It's never going to work again. And if you retry it, we're going to penalize you. I get those approved. It's worth tens of millions of dollars to me every year to retry those. And I pay millions of dollars in penalty fees. So I don't know, it's lazy banks are probably a piece of it. We probably could figure out which bins we should retry all the time. But yeah, that never made sense to me. And we're happy to pay the penalty fees because it's good business for us.
I wish more people would hear what you just said there. It's so important. Like, you're willing to make a business conscious decision and incur the penalty fees. That is rare.
Well, like, we're like Netflix and Spotify, and Wall Street wants to see active user base. Like, the big reason my function exists at Adobe is we're supposed to plug the leaky hole in the bottom of the bucket. And if someone didn't call and said they want to cancel and the payment doesn't work, we need to do everything that we can to get successful transactions.
Albert, my infrastructure guy, the biggest paradox in payments. Everybody's selling speed and real-time everything. What's reality?
There we go. I was just going to touch on one thing before I go on there, which is that I think based similar version to Andy's rules. When we're trying to train people in payments, I say it's a game of telephone for people who know that game. Because, you're talking to a can and there's a string that goes to the next person. If you've ever played that game, the message never ends up the same at the end of the game. And I think payments has a lot of that happening because it's developed over time organically with a lot of different players. So I think if you I do this a lot with technical people. If you put that idea in your mind when you're building, then of course the specs, it doesn't matter what the spec says, because you're going to actually have to validate whether the message got to the end of the string in the right way. So yeah, I mean, I think I touched on it a little bit before, just in relative to cost. I think messages move quick, but money doesn't traditionally. I think that's changing with some of the new stuff. But I think a lot of what seems quick, I think Matt's prioritizing customer experience. All of the merchants we work with are always thinking about that customer experience. So they make payments go fast to make it a good experience. And we're all used to it. You're ordering pizzas. You don't want to sit there and wait. You want it to be done. But the money behind that is locked in some very old systems even today. And I always like reading the stories in the Financial Times and the Wall Street Journal where you realize even some of the crypto stablecoin stuff, they still get caught in traditional finance. Because at the end of the day, cash doesn't always move that fast and they get stuck, right? They get caught off guard when they're trying to maintain those currencies. So yeah, I think we're trying to create super polished experiences that are great, but I still think the systems are still catching up. Whether it's declines, whether it's keeping credentials updated, all that stuff is still, Matt, you called it out, I think, for the big networks that are trying to get banks to implement the latest and greatest that the networks are working on, they still have to go prioritize that. They got to get it on their roadmaps.
Yep.
They got to get it done. It takes
merchant side and the issuer side. Those are big long-term projects to make system
that's right.
changes. Yeah.
Love the conversation, guys. One final question for everybody. What is the one change in payments you thought would have happened by now, but we're still waiting for? Let's go. Rapid fire. Matt, you're up first.
Oh man, I don't want to go first. Go to Andy first. Let me narrow it down to one.
All right, Andy, you're up.
Yeah, honestly, for me, it's reporting and visibility. I would have thought in 25 years, I would be able to look in and see what actually is happening. I don't have to get a degree in the dark art to figure out what all this stuff means. I just want to know how my business is running. What is my auth rates? What are declines? What are these? The lack of cohesive, sufficient reporting in this industry is appalling, one. And two, you can't see your business. I mean, the thing is when it used to be singular, you'd be singular with one processor and stuff, and you could kind of get around the really bad reporting there. But now modern businesses have multiple processors, and it might not just be for credit cards. It may be for alt payments and all those other things. But just to have that visibility into how your business is operating, because shit's going to go wrong. We've defined that. That's not based on you doing anything wrong. It's just going to break. You need to find out about that right away and figure out who you need to talk to resolve it right away. The fact that that still is a challenge 25 years later is sad. And it's probably the single most important thing that would have made me more successful out of my career if I had that from the providers.
All right, Albert, you go.
All right. Well, I had the luxury in the past life of working a lot with the network tokenization spec, and I'm dating myself, and we've done that. I am still surprised that as a way of getting more data to issuers has not exploded, because it is new. Relatively speaking, it has a lot more data can be sent and shared, which I think the mobile wallets are definitely trying to use. But the rest of us are like building sidecar data sharing, like all, there's 3D secure, but everyone, but if you're creating a credential that represents a customer, you have an opportunity to share more, and that context can be shared. It drives me nuts that that the rollout's slow, that the use of I get it, again, Matt, you mentioned it, banks have to update, but there is a spec that could be used. It's modern. Let's go a little bit. Let's make some of these slow things faster, and let's share more data. We get it. Issuers want to know more. Hey, it's not just about saying that a customer's a valued customer because you've stored their credential. It's about saying, I also know a bunch about this person. And then the bank has the opportunity to use that in decisioning, and it's all there. It's like we don't have to create yet another process. So it just surprises me. I've been excited about network tokenization for too long, and I've gone through 2 cycles of despair. Like, this stuff's not going to happen. It's not, and then the development on it. I think agentic stuff, not to bring in the meme, but I think agentic stuff might actually push it finally to kind of let's actually share more data. That's always been there. The spec's not changing because we're doing agents. They're just using what they released 5, 6, 7, 8 years ago. So that's my thing. I wish for customers or for like companies like Adobe that value their customers and know them, how do we get that information to the edge of the ecosystem so better decisions are made? Then why not? Why aren't we doing it more?
I second that. I think ultimately the customer that merchant is trying to deal with and the issuer who's making the decision, the reality is the merchant and the issuers don't really communicate effectively and have been partnered up on the risk side especially. Could you imagine? And I really love like what Cap One is doing trying to work with merchants so the merchants could actually share additional information for better risk decisioning. I mean, this is equally a risk game, and I'm shocked that issuers are making decisions without merchants in partnership with merchants, and the tooling doesn't exist today. Matt, we've given you a break until last. What do you got?
Yes. You know what? I'm going to jump on the bandwagon with Albert. And when it comes to data sharing between merchants and issuers, I don't think it's just about risk decisioning. Like a specific use case for Adobe, we're a subscription company. We charge the card every single month. And a lot of banks and PayPal make it really easy for somebody to see all their subscription charges and just to hit a button in your banking app, and the Adobe payment will just never work anymore. Like I want information to come from the issuer. Tell us, hey, the next time you're going to try a transaction, it's going to be blocked. That buys us time. It helps us figure out what to do about a customer that we're going to lose early in the process. And, that's a really specific example, but, 3DS data only rails, all these other things that kind of put the issuer and the merchant more in direct contact. I think only goodness can come from that. And it's not scalable for merchants to be connected to every single issuer directly, but in some cases, I think it does make sense.
Matt, I got to say thank you, my man. You're a wealth of knowledge. It's always fun talking to you, and appreciate you pushing us here at Pagos. It's always fun. Guys, that's a wrap for our first episode of Real Talk Payments. For our guests who've been listening, if you're nodding along, have learned something, subscribe. More importantly, we're just getting started. So please leave a message of crazy things in payments that you've experienced or topics you'd like us to cover. Until next time.
Thanks for tuning in to Real Talk Payments. To learn more, visit pagos.ai.